Hi, this is Eric Dunavant with Dunavant Wealth Group, the Dunavant Wealth Recap for September 2012. Well, August is behind us. Saw the U.S. markets up about 2.5%, international markets up 2.7%. On the economic front, August was quiet, both in the U.S. and abroad, as most people were on vacation during the month. Certainly was welcome after last summer's drama and the debt downgrade. The remainder of the year, though, we expect that macro risk will increase, and here are some of the things we'll be watching. 1, the situation in Europe and what happens with their debt. 2, possible further easing from the Federal Reserve. And 3rd, and maybe most important, the presidential and congressional elections that will take place in November. This month's news or noise, I want to spend a little bit of time talking about the threat of high debt leading to rising interest rates and runaway inflation. It's certainly something that's been on my mind. But I got a surprising report sent to me by economist John Malden. They did a study which showed that the relationship between high public debt and real interest rates may be surprising versus what is being expected today. So what they did is they looked at past periods of high debt and the subsequent move of interest rates. Here are some examples of when this has happened before. In the 1870s, railroad debt exploded as they built out the railroad. The Great Depression of 1929. And in the early 90s, Japan began borrowing heavily. All of these periods were very similar to the debt increase we saw in 2008. And in all of those debt situations, government debt rates declined. The average low was actually 2%. And 20 years later, yields were still depressed. After 20 years, the average rate was only 2.5%. What the study showed was that the over-indebtedness led to prolonged slowing economic activity, which kept rates depressed. That certainly would be a surprise to what some experts are saying today and is worth considering as we go forward and make investment decisions. This month's true wealth tip. I don't know if you know this or not, but 1 in 7 people will experience a disability of 3 months or more before the age of 65. So what do you need to do to be prepared and protect yourself? The first thing is look at long-term disability insurance. This covers the costs from a loss of income that typically lasts more than 3 or 6 months. You also need to make sure you have a durable power of attorney. That would allow you to appoint a representative to make medical decisions on your behalf in case you're not able to. You also need a living will. That would allow you or a representative to approve or decline medical care that may prolong your life, thus giving you a choice in the matter. Let us know if you need help connecting to professionals in these areas, as we'd love to help you get that accomplished in your true wealth. If you know someone who could benefit from this update we provide monthly, would you please send it on to them? We'd be honored. And as always, please send in your prayer requests. We pray for our clients each and every day and would be honored to pray for any situation that you're facing. Securities are offered through LPL Financial, member FINRA, SIPC. Investment advice is offered through Dunavant Wealth Group, a division of Cardia Planning, LLC, a registered investment advisor and a separate entity from LPL Financial. Thank you so much for joining us. We'll see you again in October. Blessings to you all.